If you want to start investing, sooner or later you'll ask yourself a simple question: where do I even begin? Charts, stocks, crypto, real estate, ETFs, bonds, it can feel overwhelming very fast. So instead of guessing or following random advice online, today I want to show you 3 essential books that together explain how money really works, why most investors fail, and how to manage risk without losing sleep. Think of these books as a complete investing foundation: mindset, strategy, and risk control. Welcome to Brain Over Budget. Before we dive in, if you enjoy clear, no-nonsense explanations, hit like and subscribe to support the channel. First book is The Psychology of Money by Housel. This book is not about stock picking. It's about how humans behave around money, and that's far more important. Housel explains that financial success has less to do with intelligence and more to do with behavior. For example, 2 people can earn the same income, invest in the same assets, but end up with totally different outcomes. Why? Because of patience, emotions, and discipline. One of the core ideas of the book is that money is a tool, not a scorecard to impress people with. It's there to buy freedom, flexibility, time, and peace of mind. Not Lamborghinis, not status or comparison. Housel also explains why compounding works best when you don't interrupt it. The real heroes of investing aren't geniuses. They are people who stay invested, avoid panic, and give time a chance to do the heavy lifting. If you're new to investing, this book teaches you how to think before you invest, and that mindset will protect you more than any strategy ever could. Now that you understand how to think, let's talk about what to do. The second book is The Little Book of Common Sense Investing. John Bogle, the founder of Vanguard, built his entire philosophy on one uncomfortable truth. Most investors cannot beat the market consistently. Not because they're stupid, but because fees eat returns, emotions cause bad timing, and trading often only enriches the brokers. Bogle's solution? Own the entire market. Instead of trying to find the next winning stock, you buy low-cost index funds or ETFs that track the market as a whole. Here's where Warren Buffett, the biggest investor of our time, comes in. Buffett famously said that John Bogle has done more for investors than anyone else in history, and he proved his point with a bet. Buffett bet $1 million that a simple S&P 500 index fund would outperform a group of professional hedge fund managers over 10 years. He won, not because the index fund was flashy, but because it was cheap, diversified, and boring. This book teaches you that boring investing is powerful investing, and for most people, that's exactly what works. A Random Walk Down Wall Street. This book takes everything you think you know about markets and challenges it. Malkiel explains that short-term market movements are largely unpredictable. Prices move based on news, emotions, expectations, and randomness. But this book isn't pessimistic, it's realistic. It focuses heavily on risk management, diversification, and asset allocation. Key lessons you will learn from this book are: why diversification reduces risk, why buying at the perfect time is more dangerous than staying invested, and why staying invested for the long term works better than chasing quick wins. This book teaches you how to survive markets, not just profit from them. Because the biggest risk isn't markets going up and down, it's abandoning your plan when emotions take over. If you read these 3 books in order, you learn how to think about money, you learn how to invest efficiently, you learn how to manage risk and stay invested. That's a full investing education, without shortcuts or false promises. This is Brain Over Budget. Like and subscribe for more.